The U.S. Bureau of Labor Statistics has released the Consumer Price Index (CPI) summary for March 2023, which shows that inflation continues to be a concern for policymakers. The CPI rose by 0.1% on a seasonally adjusted basis in March, following a 0.4% increase in February. Over the last 12 months, the All Items Index increased by 5.0% before seasonal adjustments. We intend to provide current affairs in 5-minute packs. Please support us through your likes and shares, and subscribe our channel for more 5-minute video packs. Housing costs were the largest contributor to the annual inflation rate, rising 8.2% year-over-year, while the costs of energy and used vehicles declined. The core CPI, which excludes volatile food and energy prices, rose 5.6% year-over-year, up from 5.5% in February, and the first increase since September 2022. The Fed has raised interest rates 9 times since 2022 to slow down the economy and combat inflation, and is set to consider what could be the last of its rate hikes in May. Although inflation remains above the Federal Reserve's 2% target, analysts believe that the report shows continued signs of deceleration. The CPI measures the costs for goods and services in an economy, and is calculated by the Bureau of Labor Statistics as a weighted average of prices. It is widely used as a measure of inflation and deflation, and is closely followed by policymakers, financial markets, businesses, and consumers. The CPIU represents 93% of the U.S. population, and is widely reported as a measure of inflation, while the CPIW covers 29% of the population, and is used to adjust federal benefits and tax brackets for changes in the cost of living. The All Items Index increased by 5.0% for the 12 months ending in March, the smallest 12-month increase since May 2021. The All Items Less Food and Energy Index rose by 5.6% over the last 12 months, while the Energy Index decreased by 6.4% for the 12 months ending in March, and the Food Index increased by 8.5% over the last year. The report showed that inflation is still above the Federal Reserve's target of 2%, but there are signs of deceleration. The Fed has raised its benchmark interest rate 9 times over the past year, the fastest pace since the early 1980s, to combat inflation. The central bank is also monitoring the labor market, where a shortage of workers had helped push up wages and prices. The CPI is based on about 80,000 price quotes, collected monthly from some 23,000 retail and service establishments, as well as 50,000 rental housing units. It covers user fees and sales or excise taxes, but excludes income taxes and the prices of investments such as stocks, bonds, or life insurance policies. The CPI factors in substitution effects and adjusts price data for changes in product quality and features. The weighting of the product and service categories in the CPI corresponds to recent consumer spending patterns derived from a different survey. In conclusion, the CPI report for March 2023 indicates that inflation remains a concern, with the annual increase in the All Items Index standing at 5.0%. However, there are signs of deceleration, and the Fed's efforts to combat inflation through interest rate hikes appear to be having an impact. The report also highlights the continued importance of housing costs as a contributor to inflation, as well as the impact of declining energy prices and used vehicle costs. Thanks for watching. Please like, share and subscribe our channel for more videos.